Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week of 23rd of October. This week has been pretty damn bad. Obviously, we started with some hopes for earnings in the tech sector, but some of them disappointed in the cloud revenue. That, coupled with the fact that Powell did provide some details that markets didn't like, and finally on Friday, PCE showed that the fight against inflation is still ongoing. So, as always, we are going to review from the fundamental analysis each day and going through the earnings and finally going through the charts from top to bottom, from the weekly to the daily on the equities, and also going through the individual tech stocks and other markets to find correlations and find our edge to be prepared for next week. As always, first, fundamental analysis. Monday, we got nothing. Tuesday, we got S&P PMI flash. This is an advance and it's still showing above 50 that manufacturing and services are still a little bit hotter than the Fed would expect. That is an estimate, a flash reading, so that didn't provide markets too much of information, so we continue a little bit higher on Monday and Tuesday without any news. Then on Wednesday, things started to go really south. Powell speech did provide some information regarding the estimate for inflation. That's still the same, and their purpose, they find that the policy is still appropriate, and they left the door open for further hikes if the data is coming missing expectations. So higher for longer is still their speech, still their motivation, and we have to still focus on any data, any day. That's why on Thursday, everyone was watching GDP growth, and it really surprised from 2.1 to 4.9. The expectation was 4.3. So GDP growth is increasing, and at any other time in the history that would be insanely good, but right now growth means inflation, and this really blow out the markets. GDP price index also increasing from the 1.7 to the 3.5. We were expecting 2.5, and again the expectations were blown out. The only good thing was that the initial jobless claims came higher than expected. We were expecting 208,000 and we got 210,000. And well, it is what it is. Growth means inflation. It avoids the recession discussion, but on the other hand, we have to be a little bit more concerned about inflation, because growing means strong economy, strong dollar, and equities will suffer. Finally, on Friday, PCE came as expected in the core aspect, the core PCE, but higher than expected. Month over month, we got flat reading. We were expecting a downtick, so that missed expectations. Year over year, we got 3.4 flat as expected. And overall, if we also see the personal income and personal spending, look at the personal spending. 0.7 coming up higher than the 0.1% previous and the expectations, so more spending, more growth. Consumer is still strong, and it will continue fueling the inflation. And it is what it is. The fight is still ongoing against the inflation. Powell is determined to fight it, even though we are going to start a recession. Who knows? The growth is still there, but the data is not yet promising. We have to still continue reading, continue waiting for news, and the market didn't like this growth, the Powell speech, and the PCE. So that coupled with the fact that earnings disappointed a little bit. We started on Tuesday with Microsoft and Alphabet. Microsoft was really good, but a little bit disappointing on the cloud revenue. Alphabet was a total miss that destroyed Google and destroyed the Nasdaq on Wednesday. On Wednesday and the open, we opened really bad. Meta with good earnings was suffering a lot of the Alphabet drag down to the markets. And finally on Thursday, Amazon did pretty well. The expectations for the revenue, the profit margin, and the cloud were met, but Thursday reading and Friday reading really dragged the market down. But Amazon held pretty well. I think it was 7%. So if we check the charts for those companies, this is Microsoft. Really, it's really sad to see a great company with great earnings being dragged down by others. But it is what it is. 3 days of gap up, on the earnings, and then being dragged down for comparison with other cloud services. Google was huge disappointment. Look at this gap down on earnings, and then continue moving lower. Let's check the percentage, because right now we are 11% in the red since earnings. We were -12 and we got some relief, -11 for Google. And then we got the two decent winners. Meta, that was the day of earnings, buyers, and then a little bit of relief. It was higher on daily active users, monthly active users, ad revenue. I mean, it was not that bad. Day of earnings were -4, we go -6, and then we went 0. So we are again filling this gap, the gap down. So I think Meta has some buyers still. If we see the trend line, it's been more or less respected. These show signs of buyers willing to buy the stock and they trust the company. So I think being right here, right now, after all this drag down, it's quite good. And then the big one, Amazon. Amazon on earnings, it went a little bit south, but then look at this gap up. And we have a little issue with the moving averages right now, a little bit of topping tail, but in terms of percentage, we got a 7%, 6.89% on Amazon. So pretty damn good for Amazon. It's a mixed bag of earnings. Next week we have more earnings. So be prepared for that, because I think it's going to be really interesting. Before moving to the equities, I would like to provide the interest rate decisions. As always, we are still here, flat. For next week, for next meeting, FOMC, I think this is cooling down quite a bit. December and January estimates are really moving down. So we are not expecting a hike anymore this year. And the curve for interest rate cuts, it's still the same. So markets are betting more and more on a flat, on a pause, and maybe start cutting June. So it's still 8 months of higher interests. That's why Powell says higher for longer. Don't expect us to cut any interest rates next year. So perhaps in Q3 or Q4, that's why the markets are adjusting, are correcting. So let's now move finally to the charts, starting with the Nasdaq. On the weekly, I mean, we have a resolution. Finally, I've been talking about this descending triangle a lot of times. Finally, we got the resolution lower, and I'm expecting really to find some buyers down here at 14,000. On the weekly, it's quite clear that we have 2 weeks of poor performance. On the daily, it's even more clear that we have that descending triangle that 4 times in a row we couldn't break. We started moving lower and we just flashed through it. This white line is the 200 daily moving average. That's why we kind of stop right here. And we have this area of a little bit of pullback below it. So the first thing I would like to see next week is how it resolves the 200, if we find support or not. And if we don't find support, we might see some kind of breakdown again for around 200 points, around 14,000. That's a psychological support, and let's see how that resolves. That would be the plan. On the 30-minute chart, there's a lot of red. Sorry about that, but I am trying to define a lot of resistance. And let's go to the 1 hour. In the 1 hour, this is the support of the green area, is the support on the descending triangle. But look at this. This is where we started going down. The gap down, and then Friday's rejection. So a lot of downside potential. We broke heavily here. This was the breakdown on the support, and then the continuation lower. So it's not all that bad, because Fridays was a little bit of a mess, but we can find some kind of decent news. Or let's see how the price action behaved on Friday, because I found some things pretty interesting. First, this chop until 10:30. We tried to go lower and we spike higher. So all these shorts were destroyed. Then we trend lower and we look at where we found a lot of support to finish right here. In the 30-minute chart, you can see, I'm trying to analyze Thursday's and Friday's price action. This is Thursday, pretty trendy to the downside and a late spike. And then we got a gap here on the open. We gap up on Friday. This white box area is the gap up. So having that in mind, we closed the gap, we tapped Thursday's close, and we didn't tap settlement. So I think Friday's move has some buyers still, because all these people right here are protected. The Thursday's close is quite interesting. And then, more than that, this white line is the 200 daily moving average that is embedded in this chart. So look at where are we. We are finding support at the 200 moving average at yesterday's close, in this case Thursday's close, without moving to settlement and holding and filling the gap. That's something I would like to take into account, or this gap is filled. Now that I explained it, I would like to take that into account for next week. So I was talking about this bear flag, and now we have this kind of inner green topping tail inside this big red candle. So there's two options. Either we move down to 14,000 and we find even more buyers, or we just hold this area, find some structure, and try to push higher. That's the two things I'm waiting for next week in terms of the Nasdaq. In terms of individual tech stocks, We talk about the earnings one, so let's talk about the other ones. Apple, it's really, it's not super weak, but it's trying to hold in this area of 176. It's below the 200 moving average, and that's the most important thing you have to take home. This daily moving average is quite important. We are below all of three of them. So where can we find some buyers? Well, the structure here is quite interesting. So perhaps 162, or maybe not. Maybe it just recovers from here without entering this area of buyers. In terms of volume, there's quite a bit of volume. Around here also it was volume. And the interesting thing is that we got a gap here that was filled on earnings. So let's see what happens. Apple doesn't provide a lot of information, but Tesla does. Tesla gap down on earnings, trying to move higher. It couldn't, and it's now trying to resolve lower. I think this gap is the objective, a nice target to find more buyers. Also below the 200 moving average, and well, it's even weaker than Apple. Google, Amazon, Microsoft, I talk about those. So on earnings, Nvidia, it's the main one I would like to highlight. Head and shoulders, quite clear, and it's now resolving lower. Moving through this gap is going to be key. Sorry, Nvidia didn't fill this gap yet since June 12th, and we are right there. If we fill this gap, then this space is going to be a knife to the downside, and I expect to find a lot of buyers in this zone, perhaps partial gap fill to hold into the 200 moving average and then find some buyers. But Nvidia has more potential. It has just started to resolve the head and shoulders, in my opinion. So be really careful if you are trying to buy here. So overall, quite a bad week. We broke high time frame structure, and we are at a critical point on the moving average that I think some investors may try to buy. Since this pivot until here, we are at 7.89. And since the high of the year on July, we are at minus 12%. So basically, year to date, it's minus 12. This is correction territory. And we have to really think about investors and long-term participants, because I think this is a pretty decent spot to see a relief rally. I don't expect to just do things like that, but perhaps doing something like this makes sense for a retest. But this move lower, breaking down structure, it's really interesting. Be careful with those longs until we find some structure played out by the big participants. Dollar, it's still holding. The structure is pretty clear, similar to the equities, but it's trying to resolve higher. This descending. There was a couple of times in which dollar was supported. So strong dollar, strong economy, strong GDP growth. Remember that. So I really think dollar is able to break that and find 107.7 or even 108 up here. So strong dollar, watch out. If strong dollar, stocks are going to suffer. The yields were pulled back by a lot, quite surprising. So there's money coming out from this, and the 2-year dropped down the 10-year, it's just consolidating still above this channel, so pretty strong, and that means that the inverted yield curve it's going even higher and higher and higher. We are super near from an inversion, and that would mean it's just this. That would mean that things are going to get more painful for equities, because the 10-year yield is going to provide a lot more yield than the shorter term, and maybe that would cause the big participants to change from risk on to risk off. Technology is going to see outflows, and something is going to see inflows. That something might be dollar continue higher, or as we are seeing, gold. Gold, look at this push. Look at these days. Gold is receiving a lot of inflow. It's considered the safe haven for a lot of people worldwide. And you can see how the volume it's still there. So watch dollar and watch gold, because gold is right about 2000 psychological. Right now 1998. A little bit of rejection here. But if you see gold reclaiming the 2000 and creeping higher, while the dollar is also consolidating or even moving higher, prepare, because Nasdaq and the S&Ps are going to suffer big time. In this case, XLF, I was watching some sectors. XLF is pretty weak. I was watching on Friday how the S&P and the small caps and the banks were performing, and look at these guys. -3, -3, -2, -2. This was a really bad day for financials. Small caps also suffered. We are at a level at which I think we are going to see some bounce, because we are at October 2022 levels down here. I mean, this is really oversold down here. And I think it's a good spot for long term. That is clear. Small caps are at long term. The S&Ps are at a level of support also. Nasdaq is at the 200 daily moving average. I mean, it's quite clear we are going to see some inflows from investors, but let's see if that overcomes the weakness that is implicit with the fundamentals, because right now things are pretty weak. All the sectors, let's check the sector performance. All the sectors are pretty down on the 10-day. This is 2 weeks. Look at what is here. XLP, staples, utilities, XLU are on top, are in the negative, but are holding better than the -4.45 of technology, the -6 from consumer discretionary. I mean, it's clear that investors are risk off totally, at least for these two. Energy is also suffering quite a bit. So if we check crude oil, that's the last thing I would like to mention. Look at crude oil. Crude oil really tried to creep higher, but it was rejected for the second time. And now we are wedging. And let me tell you, this kind of barcoding in a wedge, it's uncertainty totally. We don't know what to do, if Hamas is going to surrender or trying to find a deal for humanitarian passage with Israel, with the UN. I mean, it's not clear, but what is clear is that we rejected big time. We tried to reverse that, and we rejected again. So obviously wedging, it's possible to go up, but I don't think this is going to resolve around 90. I think crude oil is going to reject lower, and that would provide a a little bit of fresh air for inflation, and also optimism on the markets. But overall, I think we got 2 bad weeks. We are at a pretty decent point for long-term investments in the Nasdaq, in the S&Ps, with support, and on the Russell. We are at the bottom of the channel. So even though we got bad fundamentals, I'm optimistic. I think a little bit of optimism if dollar remains a little bit of consolidating up here and gold and copper stop getting inflows. I think some investors, no, maybe not huge players, but we might see some consolidation here and some buy-in. 14,000 on the Nasdaq might be a target, but it might tap it. I think 14,000 is going to hold, and I think we are going to see some buying next week on the long-term participants. How much of it will sustain the selling pressure? We don't know. That's why we have to watch the dollar, the yields, and the metals to see if the inflows in the Nasdaq and on the equities are big enough to hold this downward pressure. To stop a big trend, we need some kind of structure. We need some kind of support down here. And then when we try to reclaim some key levels like 14,400 or 500, we might see more clear how the strength is behaving. But until then, I think this is not a good spot for us retailers that are liking to day trade this market. But I think for longer term investment, it's a really good spot. And I think we are going to see that next week. So that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day like this one for the weekly recap, and also on a daily basis for the daily market forecast, market updates, and market recaps. So stay tuned to the channel, support the channel, because I put a lot of effort in these videos trying to go from the fundamentals, applying that to the technical charts, technical analysis, going through individual stocks, sector funds, metals, also checking other markets like dollar, yield, bonds, small caps. So I cover a lot of things and I put a lot of effort. So if you are liking these kind of things, this kind of content, please give it a like, subscribe to the channel. And I'm very thankful for all the videos that I am putting and you are liking and you are supporting with subscribers. Thank you for that, guys. And I will continue doing that if you like it. And I will try to teach you a lot of things that I see on the markets, try to share with you my approach to take these opportunities and to be prepared for better trading days. So that's my goal. And remember that we have to achieve this goal with discipline and risk management. Those two skills are really pretty important for your career, for your success in trading these markets. So stay safe, everyone. Have a nice weekend and see you on Monday.